I have two important things for you today. The first is some advice and encouragement on doing your 2021 taxes, especially if this is the first year you're filing for your business. The second is kind of a warning and a heads up on some new tax law changes that will likely catch anyone who's been flying under the radar and not reporting some of their income. My name's Roger Kugler. This is Working at Woodworking Podcast, episode 16. Oh boy, taxes. It's that time of year again, tax season. I know you don't want to think about it, but if you wait, as I know a lot of you will, you'll suffer the consequences. Come on, it's January. Nothing is going on. It's cold in most parts of the country. Just do your taxes. Jump into this, get it knocked out, then you don't have to worry about it in March or April when the weather is starting to improve, more work is coming in, you'll already have this done. I know I would rather empty my dust collector with a teaspoon than I would to do my taxes. But it's one of those necessary evils that we all have to partake in. Before we go any further, disclaimer. I am not a tax professional. I'm just a guy who's been doing woodworking for about 20 years, who's filed all of their taxes, and I just want to share some of the things I've learned from my own experiences with you. Always consult a tax professional if you have questions or doubts. So let's talk about getting your taxes done. This probably isn't the first time you have filed taxes, unless you're like 18 or you just got your first job. But this may be the first year that you've had a business that you now need to report the income on. And if you're a little freaked out about that, please take a deep breath. It's really not as bad as what it might seem. Now, I'm going to make an assumption here that you have some type of a bookkeeping system. We talked earlier in episode I think 5 and also episode 9 about setting up a bookkeeping system, different options that are available to you. I certainly hope that you have done that. There's really only two big sets of numbers that you need to concern yourself with. Number one is your sales. How much money have you brought into the business in 2021? Now, your bookkeeping system should be able to tell you that pretty readily. You've been keeping track of your cash receipts, checks that people have given you. Maybe some people have paid you by ACH payments through your bank. There's PayPal, Venmo, a number of other third-party payment processors. Maybe you're selling stuff on Etsy or Amazon or eBay. Those sales records should be pretty easy to collect. The next one is your expenses. Here is where you could possibly make some mistakes that could cost you some money. We tend to underestimate our expenses. Your expenses are things like material cost, your shop supplies, sandpaper, screws, nails, nuts, bolts. Maybe you're keeping track of your office supplies, advertising expense, the cost of maintaining your website, small tools, maybe large tools that you've purchased in 2021, insurance, education, auto expense, all of these things make up your expenses. Anything that is in your chart of accounts comes into play here. Oh, one thing that a lot of people overlook, whenever you're calculating your automobile expenses, typically, or at least for me over the last 20 years, I have gotten a better deduction by using the government's per mile allowance than I have calculating the, gas and oil and maintenance and tires and so on and so forth. But you have to know your odometer readings, your mileage actually driven. So this would be a real good time to go out and check your odometer right now so that you have a end of year or beginning of year reading to factor into your tax calculation. So are you kind of a doe in headlights right now? Oh my gosh, I don't have a bookkeeping system. I meant to do it. I really, really did. May God have mercy on your soul. No. It's not all that bad. Hopefully, you have a separate checking account for your business. If you don't, well, then the former applies. But if you have a checking account, you can go back through all of your statements and start line by line itemizing. What money came in, what money went out. That calculates your net profit. Now, you may have to start digging up some receipts, but you can still calculate this, although it's going to be a little arduous and you'll probably want to make plans for doing next year's taxes. The very worst case scenario is, you just got started, you made a few things, you put them up online, they sold, you made about $900, but most of the stuff was scrap wood, and I did buy a few things, but I can't remember what it was. Just go ahead and report the gross sales. You're being totally honest. You're reporting it to the government. You're going to sleep well at night. And yeah, you're going to pay a little bit more in taxes because you have no deductions to declare. But you could have your business taxes done within about maybe 90 seconds just by including that $900 on one line. Yeah, you'll take a little bit of a tax hit, but that's just stupid tax that you're going to pay this year, learn from, and not make the same mistake next year. Some of the other numbers that you're going to need to dig up are things on your home. If you have a 2,000 square foot home and a garage that's 500 square feet, then you're using 25% of your home for business production. And the IRS allows you to deduct this as home office deduction. Don't go crazy with this. If your home is 2,000 square feet, don't claim 1,600 square feet for your business production. That's going to be a red flag to the IRS. So be truthful about this. If it's 500, claim 500. And this comes in to play whenever you start to calculate all of your utilities and other expenses to operate your home for the year. So you're going to need to record all of your utilities, all of your electric, your gas, your sanitation, your homeowner's insurance. All of these things are tax deductible for your business because you're using part of your home to operate the business. So you'll need to round those numbers up, which is something you've probably never done before. So now that you have all your numbers together in one place, now you need to calculate your taxes. Don't panic. Just because you now have a business is not really that big of a deal. If you've been using the H&R Block for the last 20 years to do your taxes, you still can. If you have an accountant or a tax preparer that you have been using in the past, you can still use them. Maybe you've been doing everything yourself online. You can still do that. You just have some more information to give them so that they can prepare your taxes. Now, as a sole proprietor, no employees, you will file the Schedule C. If you're a corporation, partnership, limited liability corporation, anything like that, that's out of my wheelhouse. You are going to have to talk to a tax professional because that is much different. But maybe this year you want to make a change. Maybe you want to do this on your own. According to the National Society of Accountants, the average cost to prepare taxes for a small business ranges from around $184 per year for a Schedule C all the way up to around $826 for a corporation. Now that is a quote from an article on Investopedia.com, the 5 best tax software packages for small businesses in 2022. I've been doing my taxes online for, the last 2 or 3 years now, I think. And honestly, I've been checking my accountant's work for probably the last 10 years by doing it online, but never actually turning it in and then trusting the accountant. And finally, a couple years ago, when everything happened, I just went right ahead and did my taxes online. So according to this article, the average person pays around $100 to have their taxes done, their normal taxes done. And the average cost to add in a Schedule C is around $150 to $200. So not that much. Now I'll tell you, the better you have done in collecting all of this information, the faster and easier it will be on a tax professional to get your return done. If they are going back and forth with you that they need, the square footage of your business, your insurance cost, the property taxes for last year, if that can drag out for days or weeks and probably run your tax bill up a little bit. So, have all the numbers in one place, just ready to go. So if you want to maybe take a stab at doing taxes yourself using the online software, the article pointed out 5 different software packages that they recommend. Now, there's, of course, a link in the show notes to all of these that I'm going to be talking about. The first on their list was H&R Block, then TaxAct, TaxSlayer, TurboTax, and Free Tax USA. They all allow small business or self-employment Schedule Cs, else they wouldn't be on that list. And most of them offer some form of tax advice or support. Some are better than others. Some require an additional fee to actually talk to a human. They all offer to do your state taxes, but again, that is an additional fee. Some don't offer any audit support. Some you have to pay an additional fee to get their audit support. And some are more expensive, some are less expensive. So kind of check out this article and do some of your own research to pick a software package that you think you'd be comfortable with. My experience is the higher priced ones seem to be a little smoother, a little more intuitive. They kind of walk you through it. And if you have questions, they have info boxes that pop up immediately, and you don't have to spend a whole bunch of time researching something, trying to figure something out. There is another option that you can use, and that is the IRS own website. That's at www.e-file.com, link in the show notes. And to get the premium package to do your Schedule C and business return will cost you about $50. So that might be an option for you. My guess is, let's just say I haven't been overwhelmed with, I won't say that. So that might be a good option for you also. Now, I know that some of you are thinking, if I get a professional to do my taxes, I'm less likely to get audited. And you're probably right. Or you might be asking yourself, should I actually pay the extra $50, $75, $100 to get that audit protection? Well, let's take a little dive into this. I read an article in supermoney.com, link below in the show notes. The chances of being audited is about 0.3%. That's about 1 in 333. So that is not that high. In fact, that's one of the lowest rates of audits in recent memory. In 2010, the audit rate was about 1%. The IRS did about 1.7 million audits. Today, that's down to around 500,000 audits. Now, something that I was unaware of is that about 74% of all audits are done by mail. I always had this vision of these guys showing up in black cars wearing black suits, grabbing you, throwing you in this little tiny room with one single light overhead and start asking you questions. No, that's not what they do anymore, apparently. They'll send you a letter and they'll ask you about this or ask you about that. And I suddenly realized, oh my gosh, I've been audited twice in the last 10 years. One of them was I made a really stupid math error and they caught it. And I owed them $14.93, I believe. More than happy to pay that. That was before I was using software back in the days of doing all this by pencil and paper and calculator. The next time was when my wife's company was bought out by another company and they screwed up her withholdings, and the letter asked to verify this number and that number and this other number, and a few weeks later we got a letter in the mail that said, based on your response, we've determined that you overpaid your taxes by like $223 and a refund has been posted to your account. Wow. Okay. The IRS giving money back. So you might get an audit, but it's not going to be the guys in the black suits, throwing you into a small room. More than likely. So why has the IRS not been doing as many audits? Well, quite frankly, it's they don't have the money to. In 2010, their budget was about $6.5 billion, and in 2019, it had dropped to $4.9 billion. So what are they doing to catch people who are not paying their fair share of taxes? Well, they're relying more on computer algorithms. And whenever you turn your taxes in, all those numbers get crunched and the computer is looking for things that will trigger a red flag. According to this article, the number one trigger is the Earned Income Tax Credit. That's the tax credit that parents enjoy when they have a job and small children. You get to deduct the little buggers. When my children turned 18 at their birthday party, I cried. I was losing a wonderful, wonderful tax deduction. So anyway, there appears to be a lot of fraud and abuse surrounding the EITC. So that's the number one thing. The second was bloated deductions. I used the example, if you have a 2,000 square foot home and you're claiming 1,600 as a business office space, that might be considered a bloated deduction. The third thing was deductions for travel, meals, and auto expenses. As woodworkers, probably not a real big deal, although I could see where somebody could try to abuse that, but that is going to be a trigger for an audit. Businesses reporting a loss, especially for several years. Now, I went, I think, 3 years reporting a business loss, and my tax preparer advised me that usually around 5 years, the IRS will start asking questions. And I was able to turn a profit, I think, the fourth year. I started out with virtually no power equipment, so I had to buy everything. And that kind of made me think that you hear reports about most small businesses fail within the first 5 years. If somebody was trying to dump some money to save on taxes, a business, 5 years, yeah, that kind of makes sense. Another trigger was odd or unexpected deductions. So maybe if I went out and bought a Ranger bass boat, 18 feet with like a 325 horse with the Talon anchoring system, a Lawrence or Humminbird, GPS trolling motor fish finder combination, I wonder if that would signal any red flags. I mean, but it's a business expense, right? And a big one was simply not filing a tax return. Geez, can't think of why that would be a red flag. And the other one, which I think a lot of people don't think about, is W-2s and 1099s and what you told the federal government not matching up. So if you did some work for someone and they gave you a 1099 and you didn't report that on your tax filing, that algorithm's going to catch that, because whoever issued you the 1099, they've also reported that to the federal government. They're required to. So that trips a lot of people up. And that brings me to the second part of the podcast. The IRS is spying on you. I watched a stupid YouTube video, one of those the sky is falling videos, that the IRS is evil and they're going to take over your life and so on and so forth. But he did get me to do a little research on this, and I found an article in the Augusta, Georgia Chronicle newspaper, and it was talking about a new program that's been instituted under the American Rescue Plan Act, or the COVID-19 stimulus package that was passed last year, that has changed reporting requirements. Now, I mentioned the 1099. Well, this act has created what's called a 1099-K, and that requires any payment platform or money transfer app like PayPal or Venmo to report any monies over $600 for goods and services to the federal government. So if you are on Etsy, or you're just selling something out of your workshop and you give them a PayPal invoice and you click the button that says goods and services, and if it's over $600 in the calendar year 2022, PayPal is going to issue you a 1099-K for whatever amount they had. Now, in the past, we've had this, but the ceiling was pretty high, like $20,000 high. And you had to have so many transactions, like 200 transactions or something. Now, on Etsy, anything over $10,000, Etsy would send me a 1099. But now that number is down to $600. Now, a lot of people have been kind of freaking out about this, that if you have a yard sale and you allow people to pay you with PayPal or Venmo or Square or any of the other platforms out there, that you're going to have to pay taxes on your garage sale items. No, that's not true, because that doesn't fall in line with A, making a profit, or B, it's not a regular sale of goods and services. if you've got a kid in college and you're sending them $100, they're not going to have to report that because you would designate that as a gift. Or the other example that I heard was you go out to dinner and it's, $200 and you just pay the tab yourself, and the other people start sending you Venmo money, and you're going to get nailed for that. No, because that's considered a reimbursement. It's how you enter that money into the app that is going to determine what category it goes into and how it gets reported. I watched another video actually done by a CPA that explained this very, very well. I've got a link down in the show notes. And remember that anytime that you earn more than $400, you're supposed to report that to the federal government anyway. If you've got a W-2 job and you make $500 raking people's leaves, well, you're supposed to report that. I can remember doing that way back in the 70s when I was mowing lawns in high school. So this is nothing new. They have changed the way that they are collecting the data. And if people who have been selling stuff on Etsy or another platform and haven't been reporting it, this is going to be kind of a wake-up call for them. They are going to need to report this. And also kind of make you to start run your sideline as a business, because you're going to want to start keeping track of all of the deductions, all of your materials and expenses, so that you don't get hit with a great big tax bill. And you don't have to worry about that this year as far as filing your taxes, because that just has gone into effect January 1st. So it only applies to sales of goods and services in 2022. You will have to deal with it and report it when you file your taxes in 2023. So keep good records and pay your taxes. Give unto Caesar what is Caesar, but not 1 red cent more. Okay, that's about all that I have for you this week. The recommendation of the week, I actually have 3. The first one is a podcast by Craig Cody. Very interesting fellow, lives in New York. He was a lieutenant with I believe the New York City Police Force. He retired from that, got his CPA, and started an accounting firm. And he's been doing this podcast called the Progressive Agency Podcast. And he taught me that just because you're using a professional to do your taxes doesn't mean that that professional is getting you the most deductions. Because the first priority is they don't want to get in trouble with the IRS themselves. So they may be a little more cautious, shall we say. And he does a really, really good job of explaining exactly what the tax law is and how it is applied. The second one is from the IRS website that I cruised. They have a whole bunch of videos, and they have a video on how to file Schedule C. And actually rather impressed that the federal government could pull this off. And of course that YouTube video about the CPA explaining exactly what the 1099K is. And he did a much better job than what I did. And I would encourage you to check that out. All those links are in the show notes. So did I turn down any jobs this week? Yes, I did. Someone called, asked if I could build them a chest of drawers, and I told them not this year. I have so much stuff on my plate right now. It is crazy. But we'll all get through this. So don't procrastinate. Get started on your taxes. Don't let this wait. And I would love to hear from you. You can reach me at Roger at woodworking.com. If you have any comments, criticisms, complaints, please shoot them my way. I would especially like to hear suggestions on podcast subjects that you would like to hear. And remember, I do offer coaching to small business owners in the woodworking industry. Maybe you're just struggling to get started, or maybe you've been doing this a while and you just kind of are stalling out a bit and maybe need some encouragement or, a good kick in the pants, perhaps. So check out the website, www.workingatwoodworking.com, for more information. And here's wishing you happy woodworking. Thanks a lot.